much. Before we start, I just want to thank the leadership here at ADGM, His Excellency Ahmed El Zabi, the team at ADGM, and I also want to ask, I don't see Zil in the room, who is the mischief maker who decided to put two guys from New York on a conversation together, one from Buffalo, one from Queens, where we have rival NFL football teams?
I think I need to leave.
Yeah, this sparks may fly, but
Yeah.
I think it'll be fun. So, Dan, I always like to get a little bit of someone's backstory, and I'm very intrigued. How does someone from Buffalo get involved in emerging markets and special situations, and how do we get to Argentum?
Well, thanks for the question, and good afternoon, everybody. Dilip, great to see you again and be here with you. Well, I guess my story goes way back. I got involved in emerging markets and distressed without knowing that they were emerging markets and distressed. It was before they were called emerging markets, before they were called distressed. So that started in the late 80s in New York City, working on the early Brady restructurings. And Mexico, Venezuela, I was one of the first analysts hired at one of the predecessors to JP Morgan. And you were at a time where it was just chaos and defaulted loans. There were no bond markets. Berkeley says, I think correctly so, information asymmetry. I mean, there was no internet, there was no information. So it was a very quick learning curve.
So what did they call it in those days? They didn't call it emerging markets. What was it called?
I'm not going to say it was not a great term. I think this market has grown up, right? And now you see today where emerging markets is it's a sophisticated, global, huge market. I agree with the earlier comment that people call it a market. 60 plus different countries in sort of the index, in and around the index. So I mean, it's big, it's diverse, and it's sophisticated. It's grown up.
But you went from J.P. Morgan, I think. Then it was Cargill, right?
Yeah. So in 04, I was running the emerging markets credit trading desk at J.P. Morgan. We were trading everything, including distressed. And one of my customers at the time, Cargill, hired me to start a hedge fund called Black River, where we basically spun out the prop desk and created an asset management company focused on EM, commodities, global fixed income, some other things. And I ran the emerging markets credit trading business.
And then that became Argentum, I think, right?
Yep. Eventually, in 2015, led by my largest LP, we spun out from Cargill, working with Cargill. Still have a great relationship with them, amazing company. But they were gracious enough to allow us to do that, and that's how we started Argentum.
That's great. So look, the theme that we were given was this west to east migration of capital. And I guess that's also part of the whole investing in the transition. But between both of us, I mean, is this something, are you seeing this, an immediate migration? What do you think are the factors that are leading to that? And really, what's the timetable and duration? I think I have an opinion on that. I know you have one too. So why don't we start with yours?
I think the path was clear until the Fed finally moved, right? And now you have a very different dynamic with risk-free rates in the States, at 5%. What does that mean for high grade, for high yield, high single, low double digits, private credit exploding in developed markets, particularly in the U.S. So, this is the first time in quite some time where you've been able to get those returns. So I think that is drawing a tremendous amount of capital from emerging markets and generally from the East. Um, uh, but I think that's short term. Um, and the more medium term trends, firstly, I don't think these rates will last. I don't think they can last. So, probably some sort of a soft landing and lower rates are coming. Um, but if you look at the medium term dynamics, I mean, where is the growth and where's the population growth? If you go back sort of when I started in EM or 25 years ago at least, um, I think if you look at China, India, and Indonesia combined, they represented something like 18% of US GDP. Today they're 80 plus. And that trend is not reversing.
Yeah, no.
And population growth,
Yeah.
similar, right? Asia in the East is going to be the center of the investing universe.
So maybe for a moment we're having a bit of a blip where the U.S. looks fairly attractive given the interest rates, but long term, medium term, we're going to still see more opportunity in the emerging markets. I mean, my opinion is, I think while everyone's very comfortable with U.S. sovereign risk, I think people are looking at it differently now in terms of duration. We have such a big debt overhang, and then someday, that's going to come due.
And that debt dynamic is different in emerging markets. Lower leverage, I mean, what about political risk?
Yeah, exactly.
I mean, in the US, the divide is becoming starker. I mean, if you're sitting here making a decision today for the next 10 years or 20 years, you have to think about what's going to be the change in the political, sort of landscape in the US. You can't count on the middle of the two parties to set that direction. So the volatility, it's like EM volatility used to be in politics.
No, and I think it also brings us into a place like Abu Dhabi, which is almost like a modern merchant state like Venice, as Mr. Dalio said, where you can be very opportunistic within the trade winds that we see. Yeah. So let's swing east. I mean, one thing I think that's very interesting about Argentum, I know you've done Argentina, you've done some interesting stuff in Ukraine. There was a case study last year. But you've been in China doing special situations on the ground in China, which, hats off to you. I mean, when I was doing litigation funding, we looked at a lot of things that involved enforcement in mainland China. I really couldn't get to a clear path on that. For an investor here, I think I told you the story. There was an asset recovery exercise. I flew to Beijing for one day, which is a funny story. It was the same day Sheikh Abdullah, the foreign minister, landed. So when I checked into the St. Regis, there were flags, UAE flags everywhere. Someone on the counterparty side thought that I was part of the delegation. So I ended up having a lobby meeting with 10 people. They took me to a karaoke dinner. It was probably one of the easiest mediations that I was ever involved in. Yeah, but that's exceptional. So, look, China. Tell us a little bit about China. How do you do a special situation in China? How do you exit it? And I think this one also had a U.S. component of Chapter 15.
Yeah, we've been active in China since starting Black River, a little bit after that. So, mid 2000s. In our current fund, so the way we're structured, we only do special situations, we only do emerging markets, and we primarily focus on corporate situations. So we don't really get involved in sovereign. And everything that we do in terms of funds, they're private equity style funds. So our most recent iteration, we started in January of 2020, perfect timing. But we've done 7 investments in the fund in China. I think we've exited half of them. And it's about, firstly, you have to avoid the major flags of fraud and avoid these pitfalls. It's a lot more important to get the downside right than it is to get the upside right. And we've got a great team, great network, fortunate to have done that. And picking win-win situations. I think, the there's probably few people in this room that have been doing as emerging markets as long as I have. Some of the folks from Lowy are one of them. And win-win situations in EM, I mean, that is the playbook. And to figure out what is a win-win, it's different in every country. Each country has its own dynamics in different provinces or states or what have you. And I think you just got to navigate that and do your homework well in advance. Know who the players are, know where you are in terms of the priorities of the regional government, the federal government.
So is it a matter of spending time on the ground, building relationships, and then what we would call more technically a consensual restructuring?
Yes,
right,
100%.
And trying to preserve the relationship as opposed to the long arm of the law and forcing somebody into court, etc.
Yeah, I think you have to go in with a defensive mindset, but if your strategy is the aggressive U.S. style loan to own, I mean it's good. It's going to take longer. It's going to be a lot more expensive, and you probably don't want to be in court in that town where maybe that owner employs 20% of the population.
No, I agree with you.
So
so when I worked with a hedge fund out of Dallas, we had a phrase, the Texas Showdown. And we would always go in, with saying, well, if we don't resolve this now, it may get contentious. And I know there's a phrase in Arabic, only the warrior can make peace. So yes, you're there to make peace, but I do think people have to know that if you have to go the legal route and that could be contentious, you have to be prepared to do that.
100%. Even if it means, losses, expenses, whatever it means, whatever it takes. You have to do that.
What about Indonesia? I know that you've also, you've been doing things in China and you've done quite a few deals there. What about Indonesia?
Similar, very different, but similar. And it's one of my favorite places to invest. We've been, I would say, almost as successful there as in China. A little bit more competition in Indonesia than in China. We like barriers to entry and complicated situations. It tends to create a much less competitive nature. But we have one situation or two situations actually in Indonesia where one of them initially was not contentious, turned out to be contentious, and we saw it going that way. And recognized how defensive we needed to be, figured out a legal strategy, did the investigative and forensic work behind the scenes without really anyone knowing that we were doing that. And slowly but surely, the bad guy playbook was to pick off, bondholder by bondholder. We waited that out until we were close to the last man standing, and then litigated and put our cards on the table, and they caved. And this was one of the most formidable families in that country that usually they don't cave. We also, I think, probably got at least 3x more than last guy who sold. But importantly, and there are reasons why we were able to do that, specific to that situation. But other companies in that sector knew that case very well. So we didn't face those kinds of problems
Interesting.
in any other situation in that sector.
On the China deals, have the returns been similar, 3x?
Well, if you look at what we've done in China in our, not just our current fund, but we've two of the exits, I think were high twos multiples, 2.6, 2.7. But if you look at, since the beginning of Argentum, our China track record, and you compare it to, and this is not apples to apples, but if you compare it to the SEMI China high yield benchmark taken from the same time, you would have lost 50% of your money in China. So your multiple would have been 0.5.
Mm.
And on all those investments that we've done, our multiple is 2.5.
Wow, that's great. So now Argentum has offices, I think, New York? Is it Milwaukee? You have
Minneapolis.
This is a real New York bias. We don't know anything sort of west of the Hudson River. So you got
Cargill, Minnesota.
That's true. Okay, and then Argentina.
Argentina, right? London, and
now you have
here.
ADGM. Yeah. Well, congratulations and welcome. So why ADGM?
So happy to be here.
Why Abu Dhabi? Why ADGM?
Man, there's so many reasons. The capital of capital, and everybody will point to, okay, there's a lot of money here. Obviously, that's true. And that was a factor, but there's capital in many places in the world. We wanted a regional headquarters outside of the U.S. Time zone was an issue for us. But here, I mean, the infrastructure, the access to so many markets, what ADGM and Abu Dhabi is building here is a finance center, sophisticated, proactive in terms of regulatory frameworks and listening to you and saying, I think it's the first time sitting with the ADGM folks. They said, well, what are the problems that you have in other places, and how can we make those issues easier for you to do business here? And I mean, just a revelation, that honestly. And there's other very important thing. So one of the things that we do when we go into these situations, we're industry agnostic, but we have our preferences, and usually those relate to strategic objectives, right? And when we looked at, what are the strategic objectives of Abu Dhabi and the UAE, energy transition, food security, logistics, things in that nature. A lot of the assets that we get involved in fit that bill. So, and oftentimes we go in, there's a mess, whatever has created it. We will fix that mess, clean it up, but we're not long-term owners of assets. But we end up having influence, maybe control over strategic assets, and we thought this is a very logical place for us to not just get LPs, but strategic partners for those assets. And especially if we know going into assets the objectives of the specific strategic partners, it's back to the win-win theme.
Yeah, no, right? I think that's a really good point. And I think, and I would advise all the managers coming in too, is, it may look initially that like the sovereigns are sort of a million miles away and we're all here building an ecosystem from the ground up. But I will say that, once they start to know you have an expertise in a certain area, or you may have the ability to help navigate the waters, I am seeing that distance actually compress quite a bit, and the desire to tap into some of that intellectual capital, right? Many of the managers are looking for capital, but the funds are also, the sovereigns and the allocators are realizing there's a lot of intellectual capital that has been brought in, and I think there's going to be a real dynamic between the two, and that'll really make what we do out of Abu Dhabi really exceptional for all of us.
For sure. I mean, we're learning as we go, but it's been a tremendous experience. We partnered with Audio, super grateful for their support. They've been just an amazing partner for us, along with the folks at ADGM.
You think you'll see yourself doing something within the near region over the next 12 months or
yeah,
something?
I mean, eventually, I think
24.
Yeah, I think so. We haven't been very active historically in India. We've been looking to do more in Africa. We haven't done much in terms of special situations investing here. But I mean, you need to be ready and positioned. These markets where you look in the mirror and consider yourself a tourist, with what we do, don't do that.
Yeah.
Right. So, and you have to be very patient, very persistent, and have the right mindset. And if that means not doing something, don't do it.
That's smart. That's really
So-
smart. So we've got a few seconds. Last question. Who's going to have a better record this year, the Bills or the Jets?
Is that a question?
Oh, man. All right. Well, I think we're out of time. We'll see.
All right. Next year.
Yeah, definitely.
Thank you, everybody.